Crypto Hotep here with another trading video. This is going to be another charting with Crypto Hotep edition. This time we're going to be charting Cardano or crypto ticker ADA. But before we jump in here, we have to pay quote unquote bills. We are going to thank Coinbase. So this video, as mostly all of my videos, are sponsored by Coinbase. We do have a partnership with them, and I'm very blessed to have that partnership. Thank you for the referrals that have signed up so far. And if you aren't using Coinbase, or if you are, feel free to use the link at the bottom of the video to support the channel, support me. And you really don't have to spend any extra money. All you have to do is keep trading on Coinbase, and you'll be supporting us because we get essentially some of those trading fees that Coinbase charge that'll be used, and we'll be paid in that. So all in all, good partnership. We are getting some incentives as well down the pipe, which is nice. But as you guys know, Coinbase is my broker of choice, has been my broker of choice for over 4 years now. And if you are unfamiliar with this setup right here, you would come to your regular Coinbase app and look for a little toggle that has the advanced side or advanced switch. And you click that advanced switch, and then you'll be greeted with this setup. And not only that, but you'll also be greeted with lower trading fees. That's one of the quote unquote knocks against Coinbase are the fees are very costly, but that's honestly if you're using the regular Coinbase app. If you're using Coinbase Advanced, those fees are drastically shaved and cut, and distinctly affordable in terms of buying and selling crypto. With that being said, we will jump right in here. Again, we are charting Cardano, and I'm making these videos just to keep myself honest with my process and to document my trading journey, just for me. So the first thing that we typically look at on the charts, I only have really 3 time frames: the daily, the weekly, and the monthly. I'm more of a long-term trader, and I like my levels to hold. So those 3 time frames are best for me. I trade off of the weekly, and I like to get my key levels off of the weekly as well. And this is how we do it. So we switch from Heikin-Ashi candlesticks to the line chart. And I think the line chart in trading doesn't get a lot of respect anymore, but I use the line chart every single day when I chart. So the line chart is good to find exact points where price has reversed. And it's good to find these because the line chart kind of clears out the noise as well. And so how I find key levels is I look for a dip or a low in the market, such as this point right here, and then it has to also line up with my slow stochastic indicator right here. So if this point is also in the oversold level of the slow stochastic, which is the bottom below the 20 area here, so below this green line, then that's a viable area for me to mark down. So in essence, I consider that a area of value to watch out for. And then I will go through different points, different peaks and valleys, and see where oversold and overbought levels are. Like right here, this is an overbought level because we've peaked above the 80 mark right here, which is the overbought level of the slow stochastic. And so this level, we take out our flat flop tool here. We're going to draw a little box around this area here. And if you see, when you're drawing these levels, you can see price has also interacted in this level in some form or fashion here, and acted as support, obviously resistance here as well. So we'll go through again, just look at some levels. This is a good level here as well. Again, this is predicated off a overbought level right here, so a top area, okay? And we will look for something else. Okay. That level, that is oversold, but I really don't like a lot of levels really close to each other. So sometimes I'll look for another area that I can get a level from. So something like this. This is a good level. That's a good level there. And I think that should be it for me off of the weekly here. And so with that, I usually switch back to my Heikkanashi candlesticks. And this is what we get. So you can see prices interacted really well with these levels. We at least got some change in price momentum somewhat, even if it was just a little like this. We got a little price change. It did eventually come back down, only to go to this level, which reversed here. So all in all, this is what you want to see when you get your levels together. And then one other thing that I will do is I will go to the daily chart and mark out daily levels if I see one daily level that stands out for me. So again, I'll go to the line chart, and my premise still falls in line. And if you can see here, this is one of the reasons why I trade the weekly, is because even with the daily, there is a lot of noise here. You also have a lot of, like on the slow stochastic, you have a lot of areas where it's oversold, but it's not at a key level here. So just something to watch out for. And so what I'm looking for are potential levels that price could come down and touch, which could be areas of interest here. So this potentially would be a good level here. As you can see, it's acted as support here, resistance here, potentially wicked support here, and now price is over here. So what I would do in this instance is I would take my rectangle tool out, and I would draw a rectangle box. Kind of space this out here. And this is not saying that we're going to take a trade from this area at all, but it's an area of interest that I would like to see price interact from. And so I'm going to label this green only because right now it's this area, this daily area, wouldn't act as resistance because price is above it. It would act as support. And we are going to use our daily point of interest template here. And then if we change this back to the Heikkanashi candlesticks, you'll probably see this wicked in a couple times or very close. Okay. And so the reason why I selected that daily area was because we have the daily area here where there was an over sold level here. I can see its prices interacted with it a couple times here, and now price is potentially coming into this area right now. And on top of that, price is coming in a downtrend into this area. So this could be an area where price will flip. So we will switch back to our weekly chart. And another thing I like to look at is price, or where price is in relation to the 50-day moving average, which is right here, this purple line. And if there's enough data, the 200-day moving average. For Cardano, there isn't. We're just looking at the 50-day moving average. So currently right now, price is trading below the 50-day moving average. So this could be a viable move here where price comes into this area, this daily area, for a potential bounce. And maybe some of you are saying, but Crypto Hotep, you just said that you want your key levels to hold, and the weekly levels are the best at that. That is true. Sometimes we do see, though, weekly price action bounce off of daily levels. Not a lot, but there are times that it does. So typically what I like to see is if price is coming into this daily level, I like to see the I like to see price at a oversold level here on my slow stochastic indicator. That's the first thing off the weekly. So I want to see it at a oversold level here on the stochastic, and then I want to also see price at a oversold level. So in this area below the 20, which is right here, the scale right here, I want to see below this or at the 20 or below here on the daily as well. So I want those two to align. Now currently we can see price kind of inching up towards the shaded area, and that's usually an area where I really don't want to trade at. So we would just be waiting. And essentially what I would think is if price continues to make lower highs and lower lows, eventually it's going to come to this daily area, and you would think that your slow stochastic would also show that as well. Okay. And then lastly, I do check the monthly, and I just check the monthly to see where we are at currently. So not a lot of data on the monthly for Cardano. For other cryptos there will be, but I kind of just like to see from the slow stochastic side if we've actually breached a overbought level, and we haven't as of yet, and we're coming down past that 50 or midway point of the slow stochastic. You can see we did make a double bottom pattern off of the monthly here. And then this key level kind of stopped us out here. So just a couple things that I like to look at here. And one other thing that I do like to draw out on my charts are lows. So I like to draw a low, and the low is basically just a kind of a marker for me where if price goes below that low, there's a big potential that price is going to be trading lower. So what I mean is, if price goes below this low and starts trading below the low consistently, then you can expect price to come down to the next key level, which for Cardano's sake is moving all the way down from, say, 38 cents back to 23, 24 cents. So I always like to mark down these lows, because if I'm taking a trade, I want to know where my mental stop loss or my regular stop loss is, and where I feel better at not staying in the trade. So with Cardano here, I don't see a trade currently that I would actually get in. I'd be on the sideline kind of waiting here, just seeing what price is going to do and where the weekly is going to close at. But if I was a betting man here, what I would suggest is, if the weekly doesn't close below this low, then there's a potential for price to reverse here and bounce off. So one move that I would suspect is, if the weekly doesn't close below this low, there's a potential for price to come here, break through this level, come back and retest, and then go back upwards to 60 cents or so. Now, if price does close below this level, then my first reaction to this is you may get one of these here, retest of that low, and then back down. And then that may be the bottom for Cardano, where we may see a complete reversal in price right there. But again, we're looking for buyers to come in the market here. And right now I really don't see it, only because if you look at the candlesticks here, and Heikin-Ashi candlesticks are great because you can see a lot of detail in them, where these candlesticks have no upper wicks. This is all kind of selling pressure right here, especially right here. This is a good selling pressure, bearish candle, this here. Buyers did kind of step in a little bit, but at the same time, the bears kind of retook over and then came down, or then brought price down, I should say. So, Heikin-Ashi really does a good job with this, and it kind of makes trading a lot easier when you're using this, because essentially what you're looking for is a break in the downtrend, which would be here, and you're looking for any signs of buyers. So like for here, if we go down to this portion of price got rejected at about 30 cents. Price then came down at that 24 cents mark. Buyers finally stepped in. It showed some signs of life. So, and it came at a key level. It's also at oversold level. So with my trading style, this would be viable for a buy. So I would have bought here at this level, and more than likely I would have held all the way until I saw a red candle or an indecisive candle on the price piece. And what I mean by indecisive candle is maybe if I saw a candle such as this one here, where you have a wick on both sides and a smaller green body, then I would have paid more close attention to see what that next candle looks like. Because typically, if there's two wicks on both sides, then you have both bears and the bulls fighting with price, and you don't have a clear winner here. Whereas if you have just a straight green candle, a big green candle here with the wick only going up, bulls are in control 100%. Okay, and that's kind of just my trading style, really, in a nutshell. And Heikin-Ashi candlesticks make it extremely easy to trade like that, because it takes the emotion out, and you just play by the rules. And the rules are, if I see red, I can essentially get out and wait for it. And then also trading on the weekly makes it a lot easier, because now you're not really missing any moves, because the moves aren't that fast. Whereas if you're trading on the 4 hour, 1 hour, even sometimes the daily, it can be a little quick because life happens. You may not check the charts for a day. You might not even check them for 2 days if you're on vacation or something. But here, you could essentially not check them for like 2, 3, 4 days, come back and check them and see where price is, and you'll still have like 3 or 4 days left in the candle. So it's a little bit less stress as well. So try to make this video short and sweet. Of course, it went over. Now it's 18 minutes plus, and we're going to end it now. But again, that is my trading plan, and my charting plan consists of the daily, weekly, monthly time frames, drawing key levels off that weekly time frame. And the weekly time frame levels are based off of oversold or overbought levels identified by the slow stochastic indicator here. And we also are drawing out your lows. We are also looking for patterns, and I didn't draw out one yet because nothing really stood out for me. This could essentially be a double top pattern here, essentially. But that's another thing that I typically look for, mostly bullish chart patterns. And then lastly, we said also mark out the lows. And then lastly, looking for buyers to step in with the size of the candles, and also getting indecisive or doji candles that have wicks on both ends. So if you guys like these videos, feel free to like, subscribe, comment. Let me know what you think. Let me know what you want me to chart, and hope these are helpful. And as always, thank you and happy trading.